In this video, traders, we are going to look at the importance of trading stocks in play. Stay tuned. Hey guys, warm welcome to you. All right, so a question from a subscriber, viewer, Daniel Sckarin, I think you pronounce it. Thank you very much, sir, for your question. I appreciate all your questions, comments and support, guys and girls out there. So I would be happy if the importance of the trading stocks in play, in inverted commas, would be covered, or in speech marks, would be covered in the next videos. Okay, so this is a great question. Thank you very much. Appreciate it. This stocks in play comes from, probably you got this from the guys over at SMB Capital. Big shout out to those guys over there, Mike Bellafiore, Steve Spencer. Those guys are doing what is a really appears to be a great job. You know, they've got a prop firm in New York City. They're doing prop stuff. They're doing educational stuff. They've got some kind of blogs and some articles. I know Mike's written a book, the Playbook, I think it was called. I've got to actually remember what it's called. But those guys are doing a great job. One of the good guys out there in often a shady industry. So they have pronounced this, or kind of coined this phrase called stocks in play. And ultimately what it means is, hey, you're only as good, I think there's another phrase that Steve or Mike mentions, is you're only as good as the stocks you're in. And that's quite correct across anything you're trading. Now, they specifically focus on stocks. If you're trading the indices, trading commodities, trading forex, you're trading anything, you can only get out what's happening in the actual instrument you're trading. So in other words, what they're saying is there's no point in trading a stock that's dead. If it's sitting there doing nothing, you can't make any money from it. Yes, the old days, maybe you're going to do bid and offers and make some money on the rebates, making a bit of a market maker spread. That's gone. If your strategy is based on movement and volatility, which most of our strategies are, I know all of my strategies are, and I know that many of you guys watching, all of your strategies are based on something moving from A to B with a little bit of force, a little bit of movement, and then doing it again, having multiple iterations and multiple opportunities to capture some meat from that market, that stock, that index, that commodity during a trading day if you're a day trader. So this is for day traders specifically. I probably should have mentioned that in the first place. But those saying that swing traders in play could be over a longer period of time, over a couple of weeks or a quarter, whatever. The idea is that it's so crucial to be in something that's moving and moving a decent amount. And if you're not, you cannot be in it, because you can't expect to make any money. And listen, I've been there before, probably 15 years ago, when I'm trading something and I'm thinking, why, this strategy is perfect, it's not working. Yeah, but you're in the wrong instrument. You can have the best strategy in the world, the best kind of momentum ignition capturing strategy, and it's just, there's no momentum, there's no movement, and so you're not going to be able to make any money. So the key point of understanding the importance of trading stocks in play, or markets in play, if we want to keep it broader than that, is that you're identifying things that are moving to your criteria. And so that might be for you something like, okay, for a stock specific, we've had a gap on earnings of X%. We've had a pre-market move of X%. We've had a pre 3 or 4 day move of X%, or X dollars, whatever it may be, your metric. We've had a X times more volume than we normally get. We've had a reasonable large excursion away from a moving average. We've in a new fresh territory. We've got news flow. We've got something that defines it and makes it stand out from the universe of every other market out there. Something that makes you go, yeah, I think there's likely to be a lot of money flow in or out of this asset. I think that this stock is going to see a lot of buying, or a lot of selling, a lot of interest, because a lot of interest means a lot of movement, and a lot of movement means that retail guys like you and I can capture these moves, can jump on them, can ride the waves, and get plenty of opportunity throughout the trading day. So whatever filter process you've got, and again, stocks, indices, whatever. So if you're trading the indices, it could be something like, hey, I want to see an overnight gap of X, or an overnight range of X. I want to see that there's been data come out and we're in a fresh territory. I want to see the prior day has had an ATR of 2 times its normal ATR over the past 10 days, 10 period ATR, whatever metric you're using. Again, the point is you're highlighting something that's got potential to work very nicely. for you and your setups and your strategies. And same again, we could say the same with forex and gold and forex and commodities, excuse me, but you get the idea. And the trouble is, a lot of traders are trying to trade stuff that's not moving, and a lot of the questions actually coming in at the moment are all based around in the current market conditions with forex in particular, very stagnant. Brexit's been, the can's been kicked down a little bit, lots of stuff that's not going on but is, if that makes sense. Very kind of a choppy markets, lots of noise, and people saying, hey, you know what, I'm struggling to get opportunity here. That's because on a broader scale, we're trading something that's not moving. You're trading a market that's not in play. And I know that for forex traders, you know, they're used to trading the major pairs, and that's what it is. The beauty of trading stocks, of course, is that you can leave something that's gone stagnant and go and find something that's shifting. In the day, guys, as traders, all we're looking to do is get a chunk out of a move, take our piece and move on to the next. We're not marrying it, we're not getting involved in it. Yes, we might have our favorite stocks and markets that we go back to because they genuinely, or generally, should I say, exhibit the volatility we want. But doesn't mean that we always have to do that. We just look at getting a chunk of the move, whether that's the upside or downside. So importance of trading those stocks in play is that it gets you the most opportunity. If you don't have the opportunity, you can't perform. You can be the best trader in the world, but if stuff's not moving, you're not going to make money. So that's the first primary reason. Then you're bolting the strategies that you know work in those market conditions, and then you've got the confidence those strategies are going to work. You can press down the throttle. You can start to increase your size on the very best stocks in play with the very best setups, and that's when you can start to make those incremental gains, and you can start to really serve yourself longer term for your trading account and trading performance. So that's the importance of trading stocks in play, guys. It keeps you in the stuff that's moving the best and gives you the best possible opportunity, because without that, super challenging. You can't get blood from a stone. Thank you for the question. Appreciate all your questions, support, likes, comments, shares, etc. Keep the risk manager, whatever you do, guys, and I'll see you in the next one. Bye-bye.